Now, the next one is pre-qualification does not mean you need to spend it all, okay? This is why I say it's important for you to work with a lender that's going to be a teacher and someone that you feel comfortable with having conversation about. Because let's be real, finances is one of the difficult things to ever want to talk about with anyone, and sharing the insight that you need, you have to basically bare your soul to who your lender is going to be to actually get this loan if you're going through the underwriting process, if you're not buying a home cash. So let's be real. You need to talk to your lender and understand what your pre-qualification terms look like. We are back. Man, I am glad to be here with you today. And man, we're going to talk about a lot of things and a lot of developments that took place over the last month or so, as we have now transitioned to what you can see is the bones of a new studio, because the Houston family has purchased a home in the 757 area where we will actually be staying for the next few years or so. So we'll see how that plays out. We're going to talk about a lot of things in this episode today. If you're watching on YouTube, hey, thank you for being here. If you're listening to this on podcast, definitely appreciate you for following me over there as well too. But we're going to get into a lot of details today. I want to share with you how in the national economy is now experiencing 2 quarters back to back of decline in GDP growth, and how that is now has led to a housing rates actually increasing over time from 2% from back in 2021 early, and then to this rise that we've seen rapidly in 2022 from the height of actually all the way up to 6% interest rates to what we're now declining a bit down to about 5%. In certain cases, you may see 4.75% as well too. And we are now looking at a market that is in flux with a lot of recessionary pressures actually coming in that a lot of people are trying to debate about in the national media. We're not here to talk about that today. I'm here to strictly talk to you about some things that you should consider in your home buying search if you're actually in the market for a home, and how you can take advantage and prepare and plan no matter what type of economy that you're in, to actually how you can better prepare yourself to actually move into the home that you can actually see yourself growing with and helping build your wealth. Now, one of the things that I like to always say and mention to people is that you definitely got to understand home buying is one of those things where you got to have structure in your life, but it can also be the effervescent building block to changing your way your wealth has been increasing over time. So I hope that you're locked in. I hope that you're ready to actually talk this thing out with me today and actually have a lot of information to share. And it's just going to be so inclined that I have a few points that I really want to get through here and talk to you about. So I need you to stick with me because I'm going to break it down for you. I'm going to share some examples of things that I've experienced in this home buying search. This is actually, for those who don't know, this is the second home that we have purchased in the last 8 years. Okay, so when you think about that, they're never the same. I know people can actually come on here and actually tell you any time of the day that they're not the same, but they truly are not the same. And this is one of the things that I want you to understand, and understand how to prepare and how to plan for the best ways to actually get into it. So definitely, before we get into it, definitely follow me on all the streaming channels that you can follow me on. I'm on social media as I am Craig Houston, no matter where you're at. And definitely, if you're over here on YouTube with me, I appreciate you for being here. And definitely go ahead and let's start a marriage, let's start a relationship now. Go ahead and hit the subscribe button. Let's get this thing going, or follow me on whatever streaming platform you're listening to, and leave me comments about the things that I share with you today and how these may be impactful to you, or even add on to the story a bit, because we're about to get into some dialogue that I am super excited for, and to dive in a deeper, effervescent level with you today. So let's get directly down into it. We're going to start with tip number 1 that I think is so important. I want to just make sure that you get it right. Let's talk about the reason why this home search was so important to me at this point in time to get it done. It's because, one, we're in a moment of transition in my life where basically the military may be coming to an end and things of that nature. So I want to make sure that I have some type of structure and stability in place for my family when it comes to having a home. I didn't want to be in the flux of trying to move at the same time as trying to prepare to get out the military. So it's better to have that base in place now. And that's what I decided to do. Now, with that, taking into calculation of my pension that I'm possibly going to get guaranteed to me, this put us in a situation where the home is now covered by my military income for the rest of my life. So that is important, and this is one of those things that we did, and it's one of those things where we move into a community where now our two youngest, one is going to high school, one is going to the 7th grade, and this leaves us in a situation now where they are going to be able to finish their school years out without having to worry about the complex moves of a military child. We're taking that off the table, and we're locked in, and I think we have them in a pretty decent neighborhood for schooling perspective, and I think that's going to work out perfect for them. So that is the reason why I'm super excited about this whole journey that I'm on and that we're actually starting to experience. And this is now leaves us in a space where we are looking to be able to create creatively and be able to foster that building block for our family to grow into who they're going to be overall. So let's get down to transition tip number 1 for going into your military home. Okay, for applying for a mortgage, check your own credit and don't apply for new credit accounts at a minimum of 6 months prior to applying for a mortgage loan. Okay, now here's the reason why I suggest that this may be something that you may want to do and take into consideration as it goes forward. Well, you can always check your credit one time a year for all 3 credit bureaus, whether that's Experian, Equifax, or TransUnion. You can check each one of your credit, each one of those credit unions, credit bureaus every 12 months. Well, since the pandemic, you've been able to check it more often than that because basically fraudulent activity has been happening and things of this nature. So this is where the credit bureaus have given you more flexibility in checking your credit more often. A lot of people don't even know. If you go over and visit annualcreditreport.com, the website that allows you to check your credit one time a year for each credit bureau for free, you can actually check your credit weekly, folks, at all 3 bureaus for the rest of the entirety of this year by using annualcreditreport.com. Now, I am not sponsored by annualcreditreport.com. If they want to sponsor me, that'd be nice too. But definitely, this is a tip that you actually want to check out. Okay, so now other alternatives that you have in your toolbox that you can use to check your credit more often than not, and it doesn't impact your credit score or anything of that sort, is Credit Karma. Another one that's not sponsored by me as well. But I definitely want you to understand that you have opportunity here to check your credit in way more ways than one. And this is one of those fundamental building blocks where you want to actually understand what your credit is looking like beforehand. What type of shape is your credit in before going into applying for a mortgage? Because you want to try to lock in the best possible rate for yourself overall. And if you are looking at your credit in preparation before going into lending practices with a lender for a mortgage, you're giving yourself the preparation work that you know is needed to actually be prepared to actually move into that atmosphere where you feel comfortable applying for a mortgage. Okay, now this is why I also say it's important. I think that you got to understand that it's important because soon, as we're going to talk about here in a little bit, when you get into a purchase agreement with an offer that's been accepted, lenders want to lock your rate in immediately. So if your credit is in the best shape possible, heading into preparatory work for actually getting into this loan, you're giving yourself a leg up on helping yourself get the best locked in application rate for your loan. So you want to make sure that you're actually tracking what you need to pay off, keeping things up to date, making sure there's none that needs to come up in dispute that you need to actually handle in advance. And these are things that can prepare you for being ready for actually getting into the loan process and taking big, huge hurdles off the table early on by actually just knowing what your credit history looks like and the shape that it's in. Now, I know that other people will tell you on financial gurus or whatever, and I'm not one of those. I'm just a person out here trying to educate you a bit in what I see from my experiences on how you can actually go about living life in a way that makes sense for you and applying for a mortgage the best way. And some people say, hey, don't have no debt at all. Only thing that you want to have is debt is your home. And that's fine too. I can understand that. And then I can see people that tells you, you know what, borrowing other people's money is the best way to make sure that you build your wealth. And I can understand that too. You got to figure that out for what you believe in All I'm saying is that you have avenues, but one of the things that you need to do is for sure understand what your credit report looks like before going into applying for a mortgage. Okay, and preparing 6 months out can never hurt anyone for doing that. Okay, so let's get into tip number two. Shop around for the best lender. Okay, so honestly, to be honest with you, I did not do this, but I understand the complexity of what I had going on in my life because I had an urgency. I had an urgency to get this done immediately, and I had a relationship already built with my lender. But for most people, being a first-time home buyer or being someone who has bad credit, you may want to shop a lender. You may want to shop around to get the best deal possible for an interest rate, possibly a projected interest rate, because you won't actually get the interest rate that you're going to get until you actually have a loan ready to go to work underwriting. So when you're thinking about this, shop around, ask questions. You want to kind of build a relationship with a lender who's going to be able to teach you what you need to know and what you need to understand as you're heading into getting this loan. This is where it's really important to understand the pre-qualification process. And if a lender doesn't want to walk you through the process of understanding how you can get better and educate you a little bit on what the pre-qualification process looks like and why it's so important, that may not be the lender for you. So for me, I went with the same lender that I went with the first time we purchased a home, and I had the same loan officer and everything, and it was great. So I will say, make sure that you do shop around too, right? And one of the other best practices about shopping around is that you want to be competitive in the marketplace. You want these lenders to understand that you want the best competitive rate that you can possibly get and other incentives that may be actually opportune for you, especially if they understand the incentives that you can actually get in your local state where you're actually buying the property, okay, where you're looking to establish residency at. So those are important. And I think that's one of the things that you got to take into consideration as you're actually going about your home buying process. Now, I'm going through this in a step-by-step situation of process of how I handled it and what I realized things about, and I documented my journey with to actually bring these things to you. And some of these things are going to seem kind of outlandish, and if they do, let me know. But I really want to make sure I communicate with you exactly how it is when it comes down to it about you and your home buying process. So when you look back on this in a few years, so some of these things may change. Some of the things that you're going to hear today may not even apply anymore because there are always evolving rules that's going on in real estate and on the national level. But what you got to understand is if you know the building blocks and the foundations of how some of these things work, this is going to be one of those tools where I believe that you're going to be able to take advantage of each and every time you want to go back into the home buying process. So let's get into the next one, okay? Now, the next one is pre-qualification does not mean you need to spend it all, okay? This is why I say it's important for you to work with a lender that's going to be a teacher and someone that you feel comfortable with having conversation about. Because let's be real, finances is one of the difficult things to ever want to talk about with anyone, and sharing the insight that you need. You have to basically bare your soul to who your lender is going to be to actually get this loan if you're going through the underwriting process, if you're not buying a home cash. So let's be real. You need to talk to your lender and understand what your pre-qualification terms look like. Let's say that you're actually going to be able to get a house for $400,000 as your full max pre-qualification. Okay, and now in your community, it may be a problem with that 400,000, where it may be like the nice house, that median average size range household, maybe a 3-bed, 2-bath, and it may be worth 375,000 on average in the communities that you're looking at. So that means that you either got to know how you're going to probably live a little bit further out, or you're going to have to lower your expectations, or is there a way that you can actually qualify for more? These are the things that you want to talk to your lender about and kind of understand before you head into the home buying process. And even after you get all that figured out, you also want to talk to your lender about what does that mortgage payment look like tentatively. It's not anything that they can guarantee at that point in time because you're still in the pre-qualification process, but you tentatively want to know, what does that monthly amount I'm going to have to pay on that mortgage typically look like in this range that I'm looking at? So maybe you're at the $300,000 range, and that may be like, okay, that's going to be maybe a $1,800, $1,900 payment. And then if you're at the $350,000 range, that may be a $20 to $100 payment. Okay, so you got to take all of those things into consideration and know what your expectations is, or and how much money you have in your budget to allocate towards housing. Typically, we want to see housing, or the national average for housing on budgets is about 25% of income. So you definitely want to know what your monthly payment tentatively could be based on the price range of home that you're looking to get into. Now, make sure that this is something else that you do as well too. Just understand how to build your wish list, okay? Don't build your wish list on needs, right? Well, I'm sorry, I said that backwards. Don't build your wish list on wants. Build your wish list on needs when it comes to the terms of what you can live with and what you cannot live without in a home. Okay. And now that's going to give you a price range and a price structure, in my opinion. So to me, when I think of a need, I think of, okay, how many rooms do we need? Right. I don't think about, oh, does it have basically hardwood flooring, anything of that sort. I think about, okay, does it have, what does the skin and bones look like? What is it going to encompass? Am I gonna have enough rooms for everyone? Am I gonna have enough space for everyone? Is it have more than enough bathrooms for everyone? Does it accommodate actually those type of things? Everything else is my opinion is a luxury that you're looking to get at that point in time. Stainless steel appliances, not a major deal on my end. Now that's just another want, that's another incentive that actually helps you purchase the home. But ideally, you want to know what is your needs? How many beds do you need to have? How many rooms do you need? How many bathrooms do you need to accommodate the people in your household? Does it have water? Does it have electricity? Does it have gas? Does it have these things? Those are all wants, in my opinion. So you want to outline that, and then you want to go back and say, okay, well, I would like to add this in too because it meets my price range. Because then you can start looking at homes that's actually going to be in price ranges that's going to matter, that's going to actually help you overall figure out the level that you want to actually get into when it comes to actually purchasing this home. So this $300,000 house in this local neighborhood may not have everything that you actually have on your wants and needs list, but it does meet your want list. Okay. But then if you go over here to the $350,000 neighborhood and it does have more of your wants, more of your needs all together in one, then that may, and it actually fits underneath your pre-qualification letter, that may be the house for you, because you remember you've already did the homework and understanding how much your monthly payment ranges are going to be at certain levels, and you now know if that can accommodate your lifestyle and your budget, or is it going to be too much for you and you have to give up on some of those. Okay. And like for me, for example, for us, it came down to having a 5 bedroom, 2.5 bath house at the minimum. Okay. Now we've seen some houses that met the criteria, and then we saw some houses that didn't. But we purely locked in at a level where we had enough conversation to say, okay, we definitely want to make sure that we have at least 5 bedrooms. That's 4 bedrooms for everyone, and then accommodating one for the studio. And then we have at least 2.5 bathrooms, because you definitely just want to be able to have that revenue. So anything beyond that was great. But then we actually had our want list as well. Our want list came down to, okay, if we can get it fenced in, we want it fenced in. It has a nice size backyard, we can get that too. But then it actually came down to everything else was there as accommodating at that point in time. Those became wants at the end of the day, and those wants is what we actually found in the home that we have, and what made it interesting for us enough to actually put a price purchase offer in on the home. Okay, so definitely make sure pre-qualification does not mean you have to spend it all, and we got ours well under budget. Okay, so that is what I like to make sure that we talk about here as well. So let's get into the next one. Okay, this was important too. Okay, let me just take a sip because this is important. I think I just want to make sure that we have this conversation. Okay, so let's have the conversation on the next one, right? Get you a realtor who is a teacher first and investor second. Okay, think about that for what I said now. I'm gonna say it again. Get you a realtor who is a teacher first and investor second. Now, why do I state it that way? Because this could either be your first home buying purchase, or this could be your second, third, fourth, or fifth. No matter what, they're never the same. That's what I started with earlier. So think about this for a second. When you actually are going into this home buying process, who knows the home real estate market best? You or the person who has actually been doing it for X amount of years. Let's say in this instance, 3 to 4 or 5 years, maybe even 10, maybe even 30 plus years in certain instances. They are going to have the pulse of the communities better than you are. They're going to have better networking skills in this type of segment because you only go out and buy homes every so often. These individuals, realtors, are actually selling homes or helping home buyers buy homes well more often, and they're well more versed in that type of community. So what you're looking for, in my opinion, as you're doing your interviews, that you should be doing when it comes down to getting your realtor, is basically asking specific questions that you know that you need to have the answer to because you're worried in certain instances about certain things that's going to come up in the home buying process that you don't even have an answer to yet in your mind, and you're hoping that someone is going to be able to walk you through the process of understanding those things. And that's what your realtor should be doing. So I say, get you a realtor who's a teacher first, because they're going to be willing to walk you with you every step of the way, from explaining how the contracts work, explaining some of the level of detail in the jibber jabber of the contracts that you may overlook, understanding what your contingencies are to make sure that you don't lose your earnest money deposit, understanding what is some things that's going to convey with the property, things that you don't even look at when you're looking at a property for the first time, and you may miss, but they are looking at it like, okay, this may be something else that you may want to pay attention for. You want someone with the heart of a teacher to make sure that you understand that this is not only one of the biggest purchases that you're going to make in your life, but one of the most important purchases that you're going to make in your life, and that you hit the right details down to the nitty gritty that they are going to get compensated for. Okay. Now, when I say as an investor as well, you want someone who can see things from a different lens that you may not see them from, because that may cast objections on you where you may think that a property may not be ideal fit for you, which at the end of the day, it is your prerogative on the home that you decide to put an offer in on. I'm pretty sure your realtor is going to try to attempt to work with you and make sure that you put the offer in the right house on the right time for you, what you feel is best for you, and they're going to help you through that. Some of them are not going to avoid those commissions, but they're definitely going to want to work with you in a lot of ways. So just be sure that you give yourself the opportunity to actually, let your realtor show you that they have the investing mentality too. Because, for example, we was looking at a home in our home buying process, and we was really close to aggravated about not getting the first two homes that we actually put offers in on. Okay, so yeah, we really would like the one nice house, and honestly, it wasn't at the top of the price range for us, but it was like mid price range for us, and we really wanted this house, but we lost out on cash value. We didn't put enough cash down, which we're going to talk about that here in a little bit. But really, we saw this other property, and it was a nice property. It was on the cul-de-sac. Neighborhood was not the best, I could say, but it was decent, and it was actually not that far away from the naval base. Well, when you pull up to the home, definitely get out the car. It's a highway behind the tree line in front of the house. So you can literally hear the highway as soon as you step out the car. Now, when you walk inside this house, you don't hear the highway, which is insane, right? But you're taking on a risk, in my opinion, by buying a house that's close to the highway. I mean, literally, it's behind the tree line. You can see traffic going to the base from this house. And I mean, serious question that we asked the realtor is, could this house resell if we actually was to purchase it? And he rattled off immediately, yes, this house could resell. It probably would sell for more in a time, because just to the fact that it's a simple commute to work. It's actually a nice home. It's a spacious home. It had 5 bedrooms, 3 baths, a bigger studio than this. And then basically it had all the upgrades of appliances, nice flooring. It had all the amenities that you could want, and it had a nice backyard. Even though it was sloped, it was fenced in. It had everything that you could want and need in a home for our lifestyle. But the one thing that kept coming back to me was that highway, and he reassured me that it was that, and I believed him. We actually was close to putting an offer in on that may have possibly would have gotten accepted, but we decided that we wanted to go in a different direction, and we did. But he had the investor mindset to understand exactly what was going on, how that could probably be a hindrance to us, but really and truly understanding from an investor standpoint, if I was to rent that home, I could even rent that home if it came down to it. But it was just one of those things. We wasn't a home for us at the end of the day, and we didn't go with it. But we really did understand that it could be a benefit from all the other amenities that it had going available for it, especially being that close to like a short commute to the one of the major naval installations in the world. Um, it could actually be a very nice investment property, and it was priced pretty accurately for how it would actually going to go. And so, at the end of the day, it's about knowing your realtor want to teach you first, but also they have the heart of an investor second. Okay, that's what matters at the end of the day. So just make sure that you're interviewing your realtors, understand who your realtors are, understand how they're coming about, approaching levels of work that you're thinking about, and that y'all can be on the same page, and that y'all have some type of good rapport to where it's no problem for you to ever pick the phone up and call them, and they're going to be there to help you whatever step of the way. Okay, so that is that one. So let's talk about the next one. Okay, this is why I said we was coming back to. We're going to get ready to revisit here. Listen to your realtor when it comes to the pulse of the market. I started this conversation saying who is going to know the market the best, you or a realtor. Of course, your realtor is going to have the pulse of the market that's currently that you're in the palm of their hand, because they're going to be seeing comparables all the time. They're going to be seeing listings coming in the MLS and rolling out of the MLS in such quick, orderly fashion from the market that we've been in, that they're going to know essentially what you need to do to get this home. If you just listen to them, they possibly are going to steer you in the right direction on the cusp of that what you really want for yourself. Okay, so I want to make sure I put that in there. Now, one of the things that I understood about this recent market that we was in, that we're not in currently at this point, but what we were in was that it was definitely a seller's market. Houses was coming off the MLS within 3 to 4 days, sometimes 24 hours. If it was a house on the market more than a week, then somebody thought something was wrong with it. It became these things where people was actually going in well over their head in cash to actually buy these homes and getting them out of the property. But your realtor knows the type of communities that you're looking at and what the demand is for those communities. If you just listen to your realtor, you can possibly get a lot of these details done in such orderly fashion that you can be moving into your home before you know it. Okay, so for example, okay, I like to tell this story all the time. We was in two different markets. So this market is different than the market that I was in 2014 when we bought our first home in San Diego, California. Well, we stayed there for about 5 years or so. So basically, we purchased that house for no money down. Period. Like no cash out of pocket at all. Like we didn't spend anything that to have that home. Yeah. So basically, we used that VA loan, and we had got our nice interest rate, 3.75 at that point in time. And then basically we put $1,500 down on the house for earnest money deposit, but we got the seller to actually concede 4% closing costs, which that 4% closing costs covered everything about the home. Okay, we didn't have to come out of anything out of pocket. The only thing we had to pay for was the earnest money deposit, the appraisal, the home inspection, and they even paid for the termite inspection, I think. Or maybe I did. Maybe I did and had to get tented or whatever, but the sellers paid for the tent. So they did all those things in an orderly fashion. And then at the end of the closing, the escrow sent me a check back. So I really didn't pay anything out of pocket for this home in San Diego. Fast forward to now, being in Virginia, I had to pay pretty much $30,000 for this house. Well, not 30,000. That's too much. That's over exaggerated. 22,000. Yeah, we've actually had to pay $10,000 over cash to get $10,000 over appraised value to get this home, and that's what the market was dictating at that point in time. That you had to guarantee cash to the sellers to actually get out of this, to get them out of their property, and or to at least win the purchase offer. Okay, so when it comes down to it, what happens is that we didn't do that the first two times around on those properties that we actually had really good interest in. So we lost out on them. I think we came up with the cash, put the cash up, and then I was trying to be stingy. I'm like, hey, well, I need this cash. But at the end of the day, it comes down to if you want the home, you're going to put the cash in, and that's what we did. And my realtor actually, advised very well about, hey, you need to think about how much cash you may be willing to go up to, and understanding that, hey, this is house is going to, It's in the seller's market. It's not. They're going to be very aggressive, and they're not going to concede to anything really and truly. So you got to know how you're going to approach the seller in these market. Now the market has since shifted a bit here with the rise in interest rates and the purchase prices going basically flat. They're being steady now. They're not continuously increasing as at a rapid pace as they were before. And now you're starting to see some decrease in home prices as well as on some listings that's been on the market longer than 10, 15 days or so. We're starting to see that now. We're starting to get inventory that's lasting on the market about 30 days or so in certain instances, in certain cases, depends on your location. So all those things matter to understand what the pulse of the market is right now, and your realtor is that individual who's going to give you that information and who's going to keep you apprised of what that look like. And if you're not getting that from your realtor, then you need to consider, do you have the right person in your corner who's actually trying to help you purchase a home or sell a home in certain cases? So I just want to make sure that you understand, if you got a great realtor who's actually giving you a lot of information, they got the heart of a teacher, then an investor second, and you're listening to them talk about how you probably should need to go about handling your strategy for whether it's a buyer's market or a seller's market. Well, I gave you two examples. Give you an example clearly of how I bought a house, zero down, money back in my pocket for free in San Diego, California in a buyer's market. And I give you the reverse in a seller's market. Oh, I had to put the cash up to get the movers, to get the seller to move out of their home. So, and to outbid other competition. So that is where it comes down to, where you have to look at what is actually going to happen here. And that message is, understand the relationship that you're building with your realtor. Okay. So let's talk about my next one. Understand the language used in your purchase offer and know what your contingencies are. Man, look, I think this is a big one. Okay. This is why I go back to basically making sure that your realtor has the heart of a teacher, because you want to know what the timelines are on things that you have due out. Okay. Because once that purchase agreement is signed, the ink is wet on it, and basically you send that into the lender is going to start doing your loan agreement. Okay. They're going to start sending you loan estimates. They're going to start trying to lock in your rate. They're going to try to get your application into underwriting. So underwriting can help get you back to final underwriting and get you to closing. Okay. You got a lot of things to do in the midst of that. Some homes you're going to be doing home inspection. Some homes you're going to be doing appraisals. You're going to be doing maybe even termite inspection. You're going to be doing things like that. Depends on your type of loan. And especially if it's a government loan, whether that's FHA, VA, USDA, or conventional, you're definitely going to be on the cusp of having to always worry about what is going on next. So definitely understand the timeline. Definitely understand your contingencies. Definitely understand, especially if you're in the HOA, what your contingency clause is on the HOA. If you have one of those, a homeowners association, you definitely need to understand the processes that you're going to be dealing with when it comes down to that. So I hope that makes sense, right? Just make sure that that contract locks you in to contingencies that you need to make sure it happens, or if they don't have it, it could be you're out on a property that you may have cold feet about. So you gotta know what your contingencies is, and this is why it's important to not only just have a relative that's a teacher, but someone that you're willing to listen to, because they're going to be dropping dimes on you to help you understand what your potential ability is to proceed to lock in the deal, or help you understand that if you want to walk away from it, these are the times stamps that you have to walk away from it. Okay. And get your unearnest money deposit back. So you got to be willing to understand and listen and know what that actually means. Okay, so I'm not going to beat the horse on that, because I think you understand that deal is going to become binding if you don't, if you just let the process roll down the road and you are not actually, giving yourself the opportunity to understand what your opportunities are in this contract. Okay, so let's get to number 8. Okay. Or number 7, I forgot, I'm off track. But let's keep it going. Get the underwriters what they require as soon as possible. Don't delay your loan getting funded, okay? So now, typically your loan goes to underwriting. After you put the purchase offer agreement in, you agree to the loan estimate, you agree to your lock-in rate or whatever your rate is going to be. Underwriting usually happens twice, right? The first time it goes to underwriting is like a general soft estimation to close, okay? Where basically they're reviewing everything, make sure all the paperwork is good. And then if they come back with anything that they might have in your file where they may have a question or two about, they're going to send that back to you to give you opportunity to go ahead and fix it, okay? Or provide the necessary paperwork for whatever they're looking for, okay? So it could be anything. It could be IN stuff. It could be, hey, where did the big old deposit come from in your account? Hey, it could be, or where did this money ever come from in the first place? It could be things like that, or it could just be, hey, do you know you had a judgment on your account? You need to call and make sure that that's closed. It could be all types of things. You just need to handle whatever the situation is based on your situation and your case correctly. And if you got questions about it, leave it down in the comments. Let me know. What is one of the things that the strangest things that you've heard that the underwriter asks you to provide documentation for or proof of when you was going through the home buying process, or while you currently in your home buying process right now, okay? So yeah, just let me know what that looked like. But during this process though, this is very important, folks. And I repeat it, please do not do this. This is very, very important while you're doing the underwriting process. Do not open up any new accounts, period. Period. Okay, like don't even think about it. Don't even leave the house, right? Don't even leave the house. You go from point A, which is your home, to point B, which is your job, and then point C, which is back home. All right, you don't go nowhere that can entice you to, oh, we just need to just do a soft credit check so we know we can, help you get this furniture, get these window blinds that you're thinking about buying for your home, getting this new refrigerator. No, don't do it. Folks, stay away from new credit during your home buying search. Like, matter of fact, after you already checked your credit 6 months prior to that, and you know for a fact that your credit is good, it's clean, you ready to go, you ready to get into a mortgage, don't you touch your credit until you have that ink signed in a 24-hour later period on your deed and your loan has been funded, and you know that you're good to go. Don't do it. Do not lose your opportunity to have the home or your dreams because you got impatient and you wanted to go buy yourself a refrigerator for your house, or a couch for your living room, or a brand new bedroom suit. Do not do it. Okay. 24 hours later, that's what you want to do? Fine. But definitely don't do it during the home buying process. I can't say enough how many times we've hear stories of people getting close to the finish line, and then all of a sudden their loan doesn't go through because their debt to income ratio has risen based on them opening a new account that they, one, didn't even report, and then two, knowing that they should not have done it in the first place. Okay, so don't get your loan delayed and being funded. Okay, that is the message here. Go ahead and keep a clean slate and let you know new credit is not your friend during this home buying process. Okay, so now we've walked through, basically checking your credit 6 months prior to. We've basically shopped around for lending, right, on your mortgage loan. Then we've talked about pre-qualification is not mean that you have to spend it all. Then we talked about finding a realtor who has the heart of a teacher and the mind of an investor second, okay? Then we talked about understanding who to listen to, your realtor, and the market that you are living in when it comes to the pulse of the market, okay? Talked about make sure that you build your wish list of wants second, needs first, okay? We also discussed don't get caught up in holding off on getting the underwriters what they need, okay? We talked about that. And then we also talked about making sure that you understand the language of the contingencies in your purchase offer, okay? So let's talk about closing on the home, okay? Now, this is a stressful time, right? Usually, by law, I want to say lenders have to have your closing paperwork 36 hours prior to closing to you for you to agree to what it is that they are basically saying that your loan is going to look like. Okay, basically the paperwork is final estimates, all that stuff. It has to be typically 36 hours. Okay, give or take. Now, weird things happen, right? So you got to be ready for weird things. Now, what I was saying about the large sums of money coming into your account, understand when you started that 6 month process out that get the money, whatever money that you're going to use for your home purchasing, closing costs, all that stuff, put it in an account at that time, right? Because here's the thing, lenders want to see 2 months back worth of statements, 60 days of your bank statements, or your most recent pay stub, bank statements, all that stuff. They want to see what's in that account. Where did that money come from? So if it's a big, huge amount that shows up during your loan processing, underwriting process, you're going to have to ask questions about it. And that could possibly delay your loan. So prepare, folks, prepare. Understand that you do the leg work early and often to alleviate the problem later. That's what you have to get accustomed to. Get in your mind. Understand that that is where we're heading. So when you see these type of things, when you get to closing, all you want to do is just like be buying a home, celebrating, taking photos with your house, things of that nature. Do not let a deposit into a bank account hold you up in advance. Now, one of the things that you can do when you're closing on your home is advise your lender that you may have large sums of money that you have to withdraw, because maybe you have it in a CD account. Maybe you have it in a brokerage account. Maybe you taking a little bit out of your IRA or your 401k. Who knows? It could be whatever reason it is. But definitely keep your lender informed so that way they know what to look for when it actually deposits. And then you just provide the documentation that they tell you that you need, because they're going to walk you through it. That saves you the time. This is why I say you also want a lender as well who has the heart of a teacher. So that way you know these type of things in advance. Okay. So like I'll tell you, like I learned a lot from this home buying process this time around. Like it's amazing how much the market has shifted in 8 years from the last time I purchased a home to now purchasing another home now. Like my selling process, super simple back then. My buying process wasn't as heartache, wasn't giving me a lot of heartburn. This one, a lot of heartburn because the competition was fierce. It was so many people out there in the market trying to purchase a home as the interest rates are starting to climb. And I think we started to see them bag off, but this is the reason why I say you gotta have cash. You gotta stay in cash. You gotta stay liquid a little bit. Don't have all your money all tied up in one place or in trades that you can't hold all the time, because that cash was the deciding factor for me among 11 people who put contracts in on this one home, okay? And the cash was the reason why. So I'm telling you, definitely stay prepared, stay in cash, and understand certain situations require you to be liquid in cash assets as well too. Now, some of the things that I did learn that we didn't talk about in this video, because I want to see where we're at here. I want to know what y'all been thinking. So I need y'all to comment down below. Let me know what do you think about the vibe of this show that I provided you with today. But also, what do you know about appraisal gaps and tide water, okay, when it comes to the appraisal process? If you know things about that, I want you to share them down in the comments with me. Definitely down there. If you're looking at this on YouTube, share them over there. Shoot me a DM on social media, Instagram, Twitter, it doesn't matter. If you think you know more about it, because I want to know, what do you know about certain topics that I want to get into it with, and I want to chop it up with y'all in the comment sections, okay? So just let me know, comment down below. If you don't know me on Twitter, on Instagram, like I said before, man, I am Craig Houston. Hey, and this is where we're at. So I've learned a lot through this process. I hope that I broke it down for you in a cool type of way where you can understand the vibe that I'm on here. And I'm going to provide you a lot more guided information like this over time. And just know, as we get comfortable in the studio, we're going to continue to do more things like this and look to bang out more bangers for you as well too. And I hope that you go ahead and like this video for sure. Definitely subscribe to the channel on YouTube if you haven't already. So let's go ahead and pair up and be a family as two. Okay, so I appreciate y'all. I want y'all to stay safe. Peace.